Opening and running a business is not for the faint of heart. New businesses fall at lightning speed. However, this should not discourage you from starting a business. Welcome to the Bots Show. Let's talk about 6 ways to cut risks when starting a business. There are steps you can take that will help you to minimize risks when starting a business. The first step is on sales. Sales should be your primarily focus within the first 2 years of business. The most important thing to do in business is focus on sales. The sales you get will either validate your business concept and mode of operation or prove that you are not on the right business. In this period, you must be ready to rethink your business concept and model if the sales are bad despite doing everything right. Put the idea out and move on. If customers are willing to spend money on your product or service, adjust your model and grow bigger. Number 2 is the good and bad customer. Distinguishing between customers who are good for your business and those who aren't is critical in the early stages of a startup. For example, customers who pay well and on time, but leaves your workers feeling disillusioned, shamed and dishonored are bad for the business. This is because your business will only be good as your employees. In addition, customers who always ask for credit book can thin out your operating capital and cash flow. Number 3 is loans. The majority of small businesses are never started with adequate capital. One of the mistakes you can make is to start raking in debts the new business cannot sustain. Taking a loan when a business is new will be similar to carrying dead weight on your shoulders. This is irrespective of whether it works or not. Every month, you'll be taking the much-needed operational cash to pay your installments. If you must, take money from friends and family as seed capital rather than loans. You should only consider taking a business loan after you fully understand the dynamics of your business and competition, and be able to project sale numbers and the potential for expansion. Number 4 is cash flow and bookkeeping. Businesses fail when there is no cash flow. You must diligently manage your cash inflow and outflow. Budget for every required cost and write down every expense. Match these with every coin that comes in or goes out. This means that you must have a dedicated account for your small business. Always separate your accounts. The inability to manage your cash flow, accounts and do proper bookkeeping always complicates operations and finances whenever you need to bring in new stock or settle pending bills. Number 5 is taxes and license. Don't cut corners with taxes and licenses. From onset, be aware of what your tax obligations will be and what operating licenses you will be required to pay for your registered business. Income tax and value-added tax are 2 of the major taxes for people with small and medium businesses. Sole proprietorship and employees fall under individual income tax and are taxed under a graduated scale. Tax spends. 6. Marketing, networking and competitors. Keep tabs with what your competition is doing. Market smartly and build a network of people who help your business. Your network will be your net worth. People are great assets. The 2 things that will get you far are networking and undivided attention to product sustainability and improvement. Always work to improve your services and products. Leaving a customer happy and satisfied beyond their initial expectation is the surest way of having return on referral business. 6 way to cut risk of failure when starting any business. Thank you everyone, and stay updated for the next episode. Subscribe.